Alternative finance. Large corporations survive with the assistance of big banks, who can lend them huge sums of capital at any given time. However, who can help small enterprises who do not have excellent credit rating and have only been operating for 2 or more years in the business? For smaller players, alternative finance could be their friend in times of need. Alternative finance provides businesses with funding that do not require borrowers to have reputable credit and minimum years of operation. Some are even designed solely to support these players. Term loans. Term loans are the most common type of alternative finance. They work the same way as installment loans obtained from mainstream banks or credit cooperatives. The lender and the borrower agree on an amount, an interest rate, and a period to pay it back. The difference, however, is that businesses nowadays can apply for term loans straight from an online lender, a loan marketplace, or a crowdfunding platform. Although modern term loans maintained its usual borrowing and payment structures, they are now built in with flexibility and transparency. They allow businesses to receive capital and send payments electronically in the name of speed and efficiency. Short-term loans. On the other hand, short-term loans differ from term loans concerning payment period, fee structure, requirements, lending time, among others. Short-term loans, for one, make use of the factor rate fee instead of the interest rate. Like in Loan Builder, PayPal's financing option for small firms, loans are interest-free, as borrowers will have to pay a predetermined fixed fee on top of the borrowing amount. The lending entity, under short-term loans, also looks at the daily cash flow of the business rather than its credit score. Further, short-term loans are famous for its faster release time for funding, generally in 2 days or less, and, in turn, faster and more frequent payment scheme. However, aside from the factor rate fee being usually high at 10% to 60% of the borrowing amount, the short-term loan market is infamous for predatory lenders who slap heavy taxes. Merchant cash advances. Merchant cash advances may look a lot like short-term loans, as they are easy to secure, and they make use of a factor rate fee instead of the interest rate. However, the difference is that a merchant cash advance is an advance of future earnings. Under this scheme, the lender provides the borrower cash sum, and the IN is paid by recouping the advance and interest as portions of the borrower's daily sales. In short, the amount of payment will change daily depending on how much the business generates for the day. No worries for borrowers though, as most merchant cash advances have no given deadline. The lender will keep taking a cut from the borrower's daily sales until he fully pays the loan. Merchant cash advances are faster to obtain and are the best alternative financing option for enterprises with low-value transactions, such as cafes and retail stores. Crowdfunding. For the more digital business, the use of online platforms to raise capital from peers, known as crowdfunding, could be the way to go. The concept of crowdfunding is to create a mutually agreed and beneficial deal for both sides without the intervention of a middleman. There are 4 types of crowdfunding, namely, debt, rewards, charity and equity. For rewards, the borrower need not return the money but has to instead give back to the funders something in return for their donation, discount coupons, freebies, promos, among others. For equity, financiers invest money in the business, and in exchange, gets a share of the enterprise. The most popular crowdfunding site is GoFundMe, while those considered most business-friendly are Fundable and Kiva. Line of credit. A line of credit is a form of financial safety net usually offered by big banks, but are now more accessible online. A business availing a line of credit can secure a sum of money that it can utilize anytime, similar to a debit card. With this, the business is charged interest only on what it withdraws from the line. Some line of credit providers allows borrowers to apply online quick and easy. US-based OnDeck, for one, lets borrowers transfer up to $10,000 from their line of credit to their debit card within a minute, far more efficient than the usual 1 day to 2 days of transacting with a big bank. As such, the most recommended option for enterprises that do not seek for significant capital, but need extra funding in dire times to cover for expenses, such as rent and payroll, is tapping a line of credit. Similar to applying for loans from big banks, businesses have to assess their needs and study their options before applying for alternative finance. They may be more accessible at the height of the internet era, but obtaining the wrong alternative finance could result in more problems than solutions. Provided a competitive and flexible finance package. All in all, would certainly do it this way again.